This is part two of my introduction to cryptocurrency. And in this video, I'll be focusing on Bitcoin specifically. And if you haven't already watched the first part, I would recommend you going back, taking your time to watch that first. And there's a link above to that. Because in that video, I introduced Bitcoin, what proof of stake is, what mining is, what decentralization is, and all of those things are a big part of Bitcoin. So please do watch that video first. And what I'm going to do in this video is look a bit more into Bitcoin and also what money is and actually what it should be. And finally, before we get into it and we jump into the video, if you've watched another one of my videos in which I discuss whether we're heading for a recession, again, see above for the link and see in the description, you should have a good understanding of the issues that I'm going to mention in this video on our current financial system, such as inflation, for example, because I'm going to be comparing Bitcoin with the financial system as we go through it. So let's jump in and let's look at Bitcoin. So I'd like to start by answering the question of what is Bitcoin before we get too far into this presentation. So there's a maximum supply of 21 million Bitcoin. So no more than that can be created, and it is therefore scarce. It's a scarce asset. And the smallest unit of a Bitcoin is called a Satoshi. And there are 100 million Satoshis to one Bitcoin. So if one Bitcoin reaches $1 million, one Satoshi would be worth 1 cent. And an unknown person called Satoshi Nakamoto launched the Bitcoin white paper on the 31st of October 2008, essentially explaining their idea for Bitcoin. And I'll include a link to the white paper in the description below if you want to give that a quick read. So how is Bitcoin actually created? New Bitcoin come into circulation through a process called mining, which, if you remember from the previous video, it requires powerful computers to essentially solve the hash to show proof of work to receive the reward. And that's what miners do, essentially. Mining confirms new transactions on the blockchain, and it's a critical component of the blockchain's ledger's maintenance and its development. So it's a big part of the Bitcoin network. Each 4 years, the amount of new Bitcoin that is created is cut in half. And that's also known as the halving. To put that into perspective, give you a bit more detail, the current reward for miners is 6.25 Bitcoin, BTC, for each block successfully mined. And this is going to fall to 3.125 BTC somewhere around the end of April, probably the 26th of April, 2024. There are currently over 19.44 million Bitcoin that have been mined. And all you need to do is go to CoinGecko, CoinMarketCap, one of these online websites, and just check the circulating supply of Bitcoin online, because BTC, Bitcoin, is only created when it's mined, which we've just seen. So the amount mined or created is the same as the circulating supply, the amount of it that's in circulation. So you can just check online to see how many have been mined at any point. And interestingly, the last Bitcoin will be mined over 100 years from now, somewhere around 2140. So there's a max supply of 21 million, and we've currently already got 19.44 million mined Bitcoin. Some people panic thinking there's only a few million left. Actually, over 100 years from now, remember, due to the halving. So as I've just mentioned, and as I said in my previous video, Bitcoin uses the proof of work decentralized consensus mechanism. And you can see on the right-hand side, again, a definition of proof of work. If you want to pause the video, just refresh your memory, that'd be brilliant. This requires members to expend effort or work to verify the transactions and add them to the blockchain. So that's what proof of work is. It's also called mining, in reference to receiving a reward for the work that is done. And we looked at what work that is, and it involves using powerful computers. Bitcoin uses distributed ledger technology, which is essentially a collection of financial accounts or transactions, which are transparent, public, distributed, and decentralized. The same ledger is owned by everyone who is validating and verifying transactions on the Bitcoin network. And that ensures security and no corruption. So transactions are immutable. And immutable essentially means that you can't change them once they're final. You can't edit them. And the two main advantages of proof of work, which you probably know already, are firstly, it's security, and secondly, it's decentralization. These are two of the three parts to the crypto trilemma that we saw previously in the last video. And this can be quite confusing. So please do go back over this again if needed and rewatch part one again to try and understand it. It is something, having been in this for a few years, it is something you need to keep going back to, really to make it stick. And I'd like to take it one step further for those who are understanding this and want a bit more information, because it is difficult for me to know what stage everyone is at watching this video. So the ledger is kept on something called the blockchain, and the blockchain is a chain of blocks of information. Basically, all of the transactions on that ledger get a digital signature, which is called a hash. And that hash becomes the header of the next block when that is created. Miners have to guess the hash on each page using powerful computers, not your laptop or your phone at home. It needs powerful processing because it's not a simple puzzle to solve. And essentially, the one that gets it right fastest receives a reward in BTC. And then that hash becomes the header of the next page, followed by a set of new transactions and a new hash or digital signature. And that keeps going and going, and is why it secures the whole network and why transactions are immutable or can't be edited once they're final. In fact, the Bitcoin network has never been hacked. And you can see in the graph here that the hash rate hit an all-time high on the 26th of January 2023 when it reached 321. You see on the left-hand side, we're going to just over 321 exahashes per second, which is the symbol E there. So exahashes per second, and you don't really need to know that term. But to explain what the hash rate is, it's an expression of the processing power dedicated to the network by miners. So it's the processing power that miners have essentially. And this was actually surpassed after this graph on the 8th of July when it reached 538 exahashes per second. To secure the Bitcoin network, there is a balance between the processing power that miners have and the difficulty that exists for them to solve the hashes. So for example, because there's a lot of processing power from miners now, which we can see it's gone from 300 to 500, there's a lot of processing power. The competition is larger. Therefore, the difficulty must increase for them to solve the hash, to make it harder. And the difficulty metric is also shown. If you look into a blockchain explorer, for example, you can see the difficulty metric and the hash rate together. And here is a table just to give you an idea of the size of the largest mining companies for Bitcoin. So we're talking in the billions of dollars in terms of market cap here for these large Bitcoin miners. So it's not an individual at home. Okay, it's miners with market caps in the billions. Top one, $3.27 billion market cap. And the countries with the largest amount of Bitcoin mining processing power or hash rate as of 2023 is shown here. So United States, Kazakhstan, Russia, Canada, Ireland, Malaysia, Germany, and Iran. Bitcoin is the largest cryptocurrency by market cap today, or in other words, the total market value of it. ETH or Ethereum is second, but Bitcoin has more than double the market cap of ETH in second place. So it is by far the most popular and therefore the only one that I'm focusing on in this video. And remember, this video is an introduction to cryptocurrency. Bitcoin's lowest market cap in the last 3 years has still been over $300 billion, with an all-time high of over $1.25 trillion. And that's just for Bitcoin, not for the whole cryptocurrency market or industry. As of June 2023, there are around 219 million global Bitcoin users. So you'd think that's quite a lot of adoption, 219 global users. However, that actually equates to only 2.7% of the global population. So when we're thinking about adoption of Bitcoin, are we there yet? So 2 questions for you. Can you send Bitcoin to other people? And can you pay for things in BTC? These are the two questions that you often ask yourself at the beginning. So the answer to both is yes. Can you send BTC to others? Yes. In fact, you can send BTC to anyone in the world. You can also pay for some things in Bitcoin, particularly online. And I've personally done that. In fact, let's look at this graph on the right, which was produced by Crypto.com, World Bank, and Global Macro Investor, which compares the growth of the number of crypto users, which is the blue line you can see there, with the number of internet users, which is the white line, at a similar starting point in terms of numbers, so the adoption of them. And what you'll see, very similar, but Bitcoin has more users than the internet. So very, very interesting, that graph. The problem the Bitcoin network has, though, which we saw previously, is that it can only process about 7 transactions per second. And it's the issue of scalability that we saw for Bitcoin, or the Bitcoin network. However, again, in the last video, we saw that there is the Lightning Network, which is a layer 2 network or solution. And some crypto companies have teamed up with Visa and MasterCard to try and address this issue and increase the speed of transaction. And if there's anything here that you're unsure of, or would like me to explain in a future video, please just let me know in the comments below. And if you are liking this content and can subscribe and like, that would be amazing, as it really does help. I do also offer one-to-one coaching in the crypto space too. So if you are looking to learn more about the crypto industry and would benefit from more of a tailored approach, just put education in the comments below and I'll get in touch where you can have a free 30-minute call. Alternatively, you can send me a DM on X, which was formerly Twitter. So to understand what Bitcoin truly is and the value it provides everyone, we've got a glimpse into it already, but we need to ask ourselves the question of what is money? We don't really ever ask ourselves what money is because it's so ingrained in our consciousness and in our society. You don't really ever have the opportunity to ask yourself that question, even through the many currencies we've had, whether it's precious metals in coins or paper money, or the plastic and digital money through plastic or metal cards. Most people were naturally, understandably worrying about how much they have of it and what they do with it, not actually whether the currency we do have is fit for purpose and is the best it can be. That is why Bitcoin is so hard to understand at first and to even accept, because it goes against what most people do and what most people think every day, especially in the Western world, if you live there, because we tend to use banks and it's very ingrained in our history and what we do. So let's get into what money is and what it should be. I mentioned in part 1 of my introduction to crypto that money is the oldest technology that humans have. And I showed you the earliest known currency or medium of exchange in a clay tablet. On the left-hand side, you can see it, that was around more than 2000 BC. And money is not what we normally think it is. For example, a coin or a note. Money should actually be thought of as something that we use to communicate value to each other. And the amount of it that we give communicates that value of that thing that you're receiving, whether that's a good or whether that's a service. So the place I'd like to start is, what should money be? And in each section of this video, I'm going to compare our traditional financial system to Bitcoin. So to begin with, money has many advantages, such as that it's a medium of exchange or currency, and it eliminates inefficiencies of bartering that we used to have. It's also a unit of account, so it facilitates valuation and the calculation of things. And finally, it's a store of value, so it allows economic transactions to be conducted over long periods of time and long or large geographical distances. But to be at its most efficient, money, through whatever currency you use, has to be and has to have the following properties. So it has to be durable, so it lasts for a long time for many exchanges. Fungible, which means exchangeable, something that's easy to trade for something else of the same type and value. For example, something that doesn't have to be revalued for every transaction. Portable, that it can easily be carried across long distances. So for example, from the French porter, which means to carry or to wear, so you can carry it. And this would be a downside of gold, for example, that it's difficult to carry gold across long distances because of its weight. Money should be scarce. There shouldn't be a lot of it. It should be recognizable and not just easily to notice physically, but also hard to be counterfeited. And finally, money should be divisible. So it can be divided up easily, like a dollar has with cents, or a pound with pence, and even better, with Bitcoin that has Satoshis, because we know it's even more divisible than a pound or a dollar. So what I want you to do is ask yourself whether the money that we know and the money that we've had, does it or has it had the properties that we've just gone through above? If we look at the examples here on the left, what would be the downside of using cattle for money, for example? Which actually, when you look at it, cattle doesn't really fit many of the criteria listed here. What about gold? Gold is difficult to divide. It's not really divisible. It's hard to cut gold up, and it's hard to carry over long distances, so it's not very portable. But gold is durable, it is recognizable, and it is scarce. It's quite a scarce asset, which keeps its value quite high. But I want to keep this relatively concise because this could go into for hours, this discussion on money. So for most of the properties above, I would say that the currencies we have today do mostly fit. If we ignore the fact that paper money, for example, for a long time wasn't actually durable, but now it's a bit more solid because it's got more plastic in its makeup. However, when we look at the money we have today, in my opinion, the two main properties that fall short are scarcity and it being recognizable. And I'm going to come back to this soon in this video to explain actually why I think that. And remember, the money we have today, we've got notes, we've got coins, we've got cards, we've got digital money today. But what we're really looking at in this video is Bitcoin and comparing Bitcoin to the money we know more recently. So let's look at that now. Bitcoin, in my opinion, fulfills all of the properties of money, and it's perhaps the first ever to do so. But it also has a property of money that nothing else ever has, and it's not on this list. And that is that it's unconfiscatable, i.e. you can't confiscate it. Because unlike when you keep your money in a bank, with Bitcoin and cryptocurrencies, you should hold and secure them yourself, meaning that a bank or a central bank or a government can't lose it, can't invest it unwisely on your behalf, can't go bankrupt, or simply can't take it. You have financial sovereignty over your own money and you can hold it yourself. Bitcoin, if we look into it, is more divisible. We've just seen that than any fiat currency we have currently. And when we talk about fiat currencies, I've given you a definition on the right-hand side. And we saw earlier that we call the many fractions of Bitcoin Satoshis. So it's more divisible. And if you are interested in money and the history of money, I would strongly recommend you watching a lot of what Robert Breedlove has to say. And if you read The Ascent of Money by Noel Ferguson, it's an excellent read if you haven't already. And I've actually just gone through that with my group because it is so informative. So if you'd like to find out more, please do check out Robert Breedlove and The Ascent of Money. But let's go back a bit in history because the US dollar, due to the Bretton Woods Agreement after World War II, was to be backed by gold with other currencies pegged to the US dollar's value. This is what happened after World War II. And this is what essentially made the US dollar the global reserve currency that we know today. And you can see in the photo here, if you look at the notes, each note was redeemable in gold. So each amount of US dollar was backed by an amount of gold. It was therefore hard to increase the supply of US dollars because they had to be backed by gold. And we know that gold is a relatively scarce asset, so they couldn't just print more and more money. However, in August of 1971, and this newspaper is from August the 16th of 1971, Nixon removed the dollar from the gold standard that we've just seen. Hence, removing the need for each US dollar to be backed by gold. And this broke the centuries-old link between money and precious metal. And you can see the title there in the New York Times, severs link between dollar and gold. And here is a video showing his announcement of this.
The strength of a nation's currency is based on the strength of that nation's, and the American economy is by far the strongest in the world. Accordingly, I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States. Now, what is this action? Is very technical. What does it mean for you? Let me lay to rest the bugaboo of what is called devaluation. If you want to buy a foreign car or take a trip abroad, market conditions may cause your dollar to buy slightly less. But if you are among the overwhelming majority of Americans who buy American-made products in America, your dollar will be worth just as much tomorrow as it is today. The effect of this action, in other words, will be to stabilize the dollar.
So when Nixon decided to remove the US dollar from the gold standard, it was essentially backed by nothing after that period. And this then led to inflation, or increased inflation, from the 1970s onwards. And if the money you earned was backed by gold, you could go to the bank and ask for the gold instead of paper money. But now it isn't. So the question I want to ask you is, what is paper money or digital money that can be created out of nothing because it's not backed by anything? What is that worth? Let's come back to one of the properties of money that we saw before, and that's it being recognizable. And as I mentioned, the Federal Reserve can print money out of thin air. And this is done much more digitally nowadays rather than physically printing notes. So yes, we have to say that money is recognizable physically, but digital money isn't. So the notes and the coins are recognizable physically, but digital money isn't. However, you can create it from nothing. And we know that counterfeit money exists in our traditional system. For example, according to the US Treasury, between $70 and $200 million or counterfeit US dollars are in circulation now. Also, can I recognize and trust my currency if I'm from Venezuela or Argentina, for example, where if I go to the shop tomorrow, the price of toilet roll or bread or whatever has gone up by a ridiculous amount due to inflation, or even hyperinflation at times. And we're going to come back to inflation as well. So is it recognizable based on what we know money should be? And I'd like you to form your own opinion on that and on everything in my videos. So is that the same with Bitcoin? And the short answer is no, because as we saw in my introduction to crypto video, the first part, Bitcoin is proof of work. So work or effort is required through mining to create Bitcoin. A bit like with gold, it requires effort to mine gold, whereas just creating money with no effort adds no value to the economy. And in fact, it's quite the opposite, as we'll see soon. It also can't be counterfeit, Bitcoin, and we've seen this before, because everybody has a copy of the ledger, so it wouldn't match if you tried to edit it, and your edited fake counterfeit Bitcoin would just be cancelled because it didn't match everybody else's. And that leads on to the next point, which is that another example we should look at is the intervention in the current financial system that we have that exists. All you have to do is look at, for example, I'll just name one, the 2008 financial crisis, which was completely made by humans. It was completely man-made. And you can watch the film The Big Short, and that explains the 2008 crisis if you wanted to do so. It's not possible to do this with Bitcoin, as there's no central figure or institution that controls the whole network. It's decentralized, as we've seen previously. Thirdly, if you're in a relatively well-off nation, you may well not really think about this because we have access to financial systems such as banks, online banking, access to loans and mortgages, and can send money to people online simply through our phones or by opening up a laptop and logging into online banking. However, there are a lot of people in the world today who don't have access to these systems and who are essentially unbanked. And I've got it here on the screen. We're in fact 1.4 billion people in the world. And you can actually see that on this diagram, which is from 2020, so a few years old. So to some of us, Bitcoin might not mean quite as much, but to someone who works away and sends money home to their family as often as they can, Bitcoin is completely transformative. They no longer have to pay a huge fee to send this home. And by the way, about $840 billion is spent each year on remittances. They don't have to wait days for it to arrive and for whatever they're using to not operate at the weekends. They don't have to produce documentation, loads of it at the bank. They don't have to prove what the transaction was for example. They don't have to queue for hours to do so. With Bitcoin, you can send any amount to any address, anywhere, at any time, 24 hours a day. It's not just open from certain hours Monday to Friday and then that process stops. You can send money at a lower fee and potentially faster, and you don't need anyone's permission to do so. And finally, unlike our currencies today, Bitcoin is a scarce asset with a max supply of 21 million BTC, which we've seen before. And we've looked at money being created out of nothing. I talked about that before, which obviously inflates the financial system, hence the term inflation, without really looking at any data on it. And before we do it, here is a video by Ben Bernanke, who's the Federal Reserve Chairman from 2006 to 2014. And so he obviously oversaw the 2008 financial crisis. And what we'll see after this video is the amount of money that was printed during and after his time at the Fed. And this video essentially just confirms that they can create money out of nothing.
Congress or the president. While they debated on Capitol Hill, Bernanke cut interest rates nearly to zero. Then he used Depression-era emergency powers to launch a dozen rescue programs of his own. There was support for money market funds, mortgages, short-term lending to small business, and support for auto loans, student loans, and small business loans. Commitments $1 trillion, doubling the size of the Fed's balance sheet.
Is that tax money the Fed is spending?
It's not tax money. The banks have accounts with the Fed the same way that you have an account in a commercial bank. So to lend to a bank, we simply use the computer to mark up the size of the account that they have with the Fed. So it's much more akin, although not exactly the same, but it's much more akin to printing money than it is to borrowing.
You've been printing money.
Well, effectively, and we need to do that because our economy is very weak and inflation is very low. When the economy begins to recover, that'll be the time that we need to unwind those programs, raise interest rates, reduce the money supply, and make sure that we have a recovery that does not involve inflation.
He's not.
So let's look at M1, which is essentially the liquid money supply or amount of cash in circulation. And what you'll see is that US dollars printed increased by 60%. So that's 60% from January 2008 to January 2012. So that period on the graph here from 2008 to 2012 is a 60% increase. And what you can see is that actually 80% of all US dollars in existence were created from January 2020 to October 2021 during COVID. And this is the M2 money supply, which I'm not going to go into much here, but it's essentially M1 plus small short-term time deposits in banks and money market funds. But again, you can see the increase in the money supply that we've had. And that video by Ben Bernanke was following to 2009, 2008. Let's now compare that inflation and the printing of money with the money supply of Bitcoin. And you can see that actually with Bitcoin, the curve flattens rather than increases. So when we talk about scarcity as a property of money, this is what it means. Bitcoin is a scarce asset, whereas the currencies we have now have been inflated massively. We saw this before. When you create money out of nothing, it devalues the currency because the more of something you have, the less valuable it is to you. And this is one of the most important fundamentals of economics, scarcity. Just look at the purchasing power of the US dollar over time here to know the value of something drops, the more you have of it. It's also linked with supply and demand. So if something is scarce, naturally there's not a lot of it. There's not a large supply of it. And that pushes up the price because people will pay more to get it. But inversely, if there's a lot of a product, the demand for it will be less because it's easier to get. So that will push the price down. If I give you some broad examples of this, you can link this idea to physical or natural goods like water. If you're extremely thirsty and there's no water for miles away and you don't have any transport, how much would one bottle of water be worth to you? Probably quite a lot. But if I had 100 bottles of water, how much would the 100th be worth to you? Probably not. Well, probably nowhere near as much, in fact. And you can also link it to things like employees and wages. For example, if I've got a business and I'm looking for an employee to hire, and there's a pool of only, let's say, 10 specialists that I can try to recruit, then I'm probably going to have to pay them more to secure their services as if they were a pool of 1,000 specialists, because this pool of 10 could simply go elsewhere and demand more money at another company. So the same thing applies, supply and demand. If we compare this system with Bitcoin, Bitcoin is by design a scarce asset. because we've seen now twice already, it has a maximum supply of 21 million BTC. So what should that do to its price over time? I'll leave that question with you. And something that we see in the media a lot, and I sometimes get asked is, but surely Bitcoin is used by a lot of criminals. So let's unpick that. So if Bitcoin is permissionless, one accusation that's been portrayed is that it's corruptible and that it's mainly used by criminals because it's permissionless. However, Bitcoin is incorruptible. As we saw in the last part, in part 1, it's completely transparent as a system because all transactions are recorded on the blockchain and they're immutable. In other words, they can't be edited. And we've already seen instances where government agencies have been able to track down corrupt money and seize this in crypto, as you can see on the left-hand side in the headlines. So it's not just used for criminals. You can't just get away from it. It's not private. So to bring this second part of the introduction to cryptocurrency to a close, in which we've looked at Bitcoin, I'd like to revisit a question I started with and leave you with some thoughts. Bitcoin and the blockchain is a platform of trust. It's not a company. It's not a product. It's not a service you pay for. It's a system of money in which, for the first time ever, there's no central figure or institution controlling it or controlling you. It's the concept of decentralization applied to our concept of value. So what is the future for Bitcoin? It's a really difficult question to answer with any degree of certainty because no one can predict the future. No one can predict financial future in any way whatsoever. And this isn't financial advice, but based on my education, I believe in the future of Bitcoin. And for full disclosure, I do have some. However, I also always advocate for a diversified portfolio when investing to hedge your risk. So I'm quite risk averse. In my opinion, it will take some time, but I believe that Bitcoin or a Bitcoin all-time high will be surpassed in the future. And you just have to look at the amount of institutional investment that will come into this space with regulation coming in the next few years. And you've got giants like BlackRock who are applying for Bitcoin ETFs at the moment, have recently recommended holding a large portion of BTC in their portfolio. And in case you didn't know who BlackRock were or are, they had $8.5 trillion in assets under management in 2022 just by itself. $8.5 trillion. But I would love to know what you think. So let me know in the comments below. What do you think of Bitcoin? And also, if you are looking for more of a tailored approach and a faster approach to your crypto education, I do offer one-to-one coaching to people who have the desire and the means to invest in their education. If you are interested, put education in the comments below and I'll get in touch to book in a free 30-minute video call with you. Alternatively, you can send me a DM on X, which was Twitter. So thank you for watching. I hope you got something out of this video. And if you haven't already, please do like and subscribe and have a great day.